I'll kick it off to Enrico. Thanks for spending your lunchtime, and if you're in a different time zone, perhaps your evening time with us. I'll kick it off to my partner Enrico, and we can get started, guys. Thank you so much for attending again.
Yes, good morning, good afternoon. I see quite a few people joining, a few familiar names. Glad to have everyone online. So good morning. We got an exciting agenda today. We're going to cover one of our favorite topics. We're sure many of you work on these topics every single day. And so the hope today is that we'll go through some of the key pain points that companies are experiencing and tell you how we've been approaching it through Revify to help organizations resolve these pain points. If we go to the next slide and we go on the agenda, what we'd like to do first is go through introductions. Not everyone had a chance to meet Armin and I, so we'll introduce ourselves. We'll go through a quick assessment of what we see with companies and how they are structured and how they approach pricing and analytics today. We'll then introduce Revify Analytics for those of you who are not familiar with the new entity Armin and I created. And then we'll dive in through some typical pain points that we see organizations struggle with and how with Revify we've been helping these organizations resolve these pain points and realize opportunities that they were struggling with in the past. And then we'll wrap it up. And so hopefully by the end of the session, you will have some insight about who we are, what we do, why we do it, as well as some points that you can take away for your day-to-day business that hopefully will be helpful for you. So let's move on to introductions. Armin, do you want to kick us off?
Yeah, thanks, Enrico. So those of you that have met before, we've done a bunch of webinars in the past. My name is Armin Kokosh, co-founder of Revify. Most of my experience has been sort of the intersection of pricing, revenue management, and data science. I've been doing that for quite some time before data science has become sort of popular. Have sort of led pricing revenue management teams across CPG, distribution, and retail, again, with a heavy sort of advanced analytics spend around price optimization and pricing systems, et cetera, et cetera. So very much of a data and analytics nerd, and very happy to be talking to you all today.
That's great. And my name is Enrico Sieni, co-founder of Revify with Armin. Same as Armin, I've been in pricing now for a couple of decades. Started off in finance and commercial roles, ended up in consulting, and then created and led strategic pricing teams for a few manufacturing and distribution companies.
Awesome. Thank you, Enrico. So guys, let me just kind of set the stage around why we're sort of talking about some of this stuff today. One of kind of the precursors is this whole idea of pricing being one of the most powerful profit levers in companies, right? And we keep talking about that as pricing practitioners, and it's sort of an ever-present statement. I still think there's an opportunity to kind of make sure that company leaders like truly kind of internalize what that means. So one of the things we've done is we've actually revisited through our sister company that we manage, Revology, this research that's been done over 3 decades ago by HBR, which is this idea of like, hey, how much impact does a 1% price realization drive for industries? And they figured that on average it was about 11% operating profit improvement. So we actually revisited that study. We looked at 2,000 publicly traded companies globally across different industries, and we found that actually changed a little bit, right? So it's about 6.4%, 6.5%, depending on industry, right? So a bit of a difference from what it was in the past. And again, there may be some minor methodological differences, but the reality is pricing is still incredibly impactful, right? And it's more impactful than any other level lead, whether it's selling more volume or adjusting your variable costs or fixed costs, right? So it's incredibly important. Obviously, there's differences in industries, right? So as you think about how relevant pricing is for your industry, you need to have that industry and the sub-industry context when you kind of talk about that, right? So for example, industries with very low operating profit percentages, right? They have the biggest opportunity of improvement, like automotive, right? That's kind of the median EBITDA improvement is about 17%, versus some of the other kind of high EBITDA industries like let's say real estate, financial services, it's very low, like 2.2%, right? So as you think about and try to relay this in your organization on how impactful pricing can be, always have this industry context in mind when you talk about that versus just saying, oh, pricing adds 11% on average, right? So very much industry dependent. And there's some kind of sub-industry research that we've done. We'll send this out to you, so I'm not going to kind of belabor the point, but even within industries, there's going to be high variation for kind of different sub-industries. So we're kind of presenting the middle 50% values. The reason I'm showing you this is all great, right? We can drive EBITDA improvements through sort of price realization, but the question is, how do we achieve that price realization, right? over and beyond what our regular kind of annual price increases are, right? So it's one thing to pass on price increases because of cost inflation and tariffs and whatever else, right? That's sort of the baseline. That's baked into your financials, right? But there's still going to be a big gap that you need to make up. And so when we talk about price realization, it's really that incremental price realization that you can drive through pricing RGM activities, right? And companies need to have sort of analytics capabilities and certainly the right resources from a human and tech capital standpoint to actually drive those things. This is now the second year in a row where we're doing a fairly detailed revenue growth analytics maturity report. And on a cumulative basis, we've interviewed or surveyed about 225 companies. This last one, I think about 150 or so folks completed that, but really evaluated maturities around 4 critical stages when it comes to pricing and revenue management. One is the obvious, how's your pricing and profitability strategy? How do you set your prices, et cetera, et cetera. The second one is price optimization, then promotion optimization, and sales and marketing enablement. This last piece, sales and marketing enablement, right? So how do you drive customer lifetime values? How do you value customer lifetime values? How do you drive upsell and cross-sell? How do you mitigate customer churn through kind of revenue analytics efforts? Most people don't think of this as a revenue management capability, but it is, right? So most people associate just pure pricing and pricing actions and promotional activities with RGM. But in fact, this is actually a key capability. So again, I'm not going to kind of bore you with the details. The only thing that I'll try to articulate in this portion is perhaps one of the main reasons we came up with Revify and this concept of pricing and RGM-as-a-Service is this big gap in capabilities, right? So you look at kind of this very high maturity level, which is really what's needed to drive sustainable, consistent kind of pricing improvements and price realization results for companies. There's really only about 2% of the companies that belong here. About half the companies have this medium maturity level. And of course, this varies by industry, and this is very much focused on mid-market. So call it anywhere from maybe 50 million all the way to 1 or 2 billion. So this is kind of the upper end of mid-market of companies that we surveyed. But one of the things that was very sort of both common sense and very telling is the level of executive support that sort of influences your capabilities when it comes to pricing and revenue management. So those surveyed that said, yeah, I agree or strongly agree that I have strong leadership support, and they recognize the importance of pricing, kind of strategic acumen and analytics acumen. They had much higher capability scores than the ones that said no, right? And keep in mind, we had about 50 or 60 questions the survey respondents answered, but that's step number one. Leaders recognizing that this is a really important capability and devoting the resources and the attention to actually driving that. The second piece that was very sort of interesting is, despite pricing and RGM, being, let's say in its third decade for the most part. I mean, it's been sort of popularized kind of in the hospitality and the travel industry. When you look at more traditional industries, let's say it's in its third decade of kind of maturity, right? Most companies, about half of them, still use the same methods they've used from day one, right? Lots of cost plus, maybe some competition kind of anchoring, and then maybe like a third of the companies rely on some subjective factors like, hey, let's do cost plus and apply an 80 basis point premium because we think we're better than the competition, right? But very kind of simplistic methods, right? Very few companies that we surveyed, about 1 out of 10 or less than 1 out of 10, actually use truly kind of value-based pricing efforts. Let's understand our differential value. Let's quantify that. Let's bake that into the pricing. So very few companies kind of leverage that, and very few companies have the advanced pricing analytical capabilities to sort of enable these kind of strategic elements of doing pricing right. And so what are the implications? The implications, there's a lot of money left on the table, right? When you treat pricing purely as a let's mitigate sort of cost inflation, or let's mitigate the impact of tariffs, or let's try to close the gap to competition across the board, you are in fact leaving a lot of money on the table. Discounting was another area that is sort of fairly subpar. About 6 out of 10 companies manage discounting very manually, right? Especially the ones that do sort of maybe kind of higher level deal desk type pricing efforts. Most of the efforts around managing and approving those discounts is very manual. Not a lot of process, so lots of sort of ad hoc efforts, emails flowing back and forth. Only about 16% of the companies that we surveyed use some sort of a workflow automation for kind of discounting, approval, discount setting, discount analytics efforts, which, if you think about, we live sort of in this world where we're kind of being kind of overburdened by AI and the applications of AI and lots of generative AI and AI COEs. Workflow automation is one of the first steps that companies can enable pragmatically and actually drive value, especially when it comes to pricing and price setting and discount processes, right? The third piece was simple concepts like price waterfall, right? Like that's such a kind of pricing 101 type capability. About half the companies said that we don't know what a pricing waterfall is. So we can't quantify kind of the drivers of our net price or margin dilution between our list prices and our pocket prices that customers are paying, right? And it varies by industry, but again, my call out here is this is such a sort of foundational capability. And to say that about half the companies in the upper end of the market they've surveyed just simply don't have the systematic capability that they can evaluate, deep dive, and act on is a huge problem as well as a huge upside. Right? And the last piece that I'll maybe touch on is call it some elements of advanced analytics efforts related to pricing and RGM, right? So about 2 out of 3 companies don't measure CLV or customer lifetime value properly, right? And again, depending on industry, like manufacturing, it's a huge issue, right? 2 out of 3 companies don't use foundational efforts like RFM analysis, which is again is like a basic kind of customer segmentation, 101 type effort based on their transactional behavior. But majority of the companies don't use that, and it really sort of again depending on industry, perhaps CPG we can kind of forgive them because it operates a little bit maybe differently, but manufacturing and distribution, with over half or 80+%, we're not actually taking advantage of that. That's a huge opportunity because this is really a foundational effort that enables more surgical customer outreach and marketing efforts, et cetera, et cetera. And so this coupled with things like understanding price sensitivities and be able to monitor it regularly, understanding your cross-sell and upsell opportunities down to the customer level and be able to quantify which products you should upsell or cross-sell to customers because similar customers have kind of similar transaction profiles, and quantifying what that opportunity is, right? Or maybe kind of understanding pricing quick win efforts in a very systematic manner. These are all foundational capabilities that we've noticed are missing from most mid-market companies. And the surveys that we've done through the Revenue Growth Analytics Maturity Scorecard are really just sort of underscoring that these are big sort of capability gaps that exist within the market firms.
Yeah, that's great context, Armin, and I'm sure a lot of people in the audience can relate to some of those issues with pricing analytics. And frankly, that's why we created Revify. So if people ask us in layman terms, what does Revify do? The best analogy that we can think of is, a patient going to a doctor saying, hey, I have a sharp pain in my finger or in my ribs, what's going on? And the doctor most likely will take you and have an x-ray taken of you, which will then be followed by a radiologist that will interpret that x-ray. And then you'll finally have a doctor, let's say orthopedic surgeon, look at the results and guide you as to how to fix that issue. And that's what Revify is all about. That's what we're trying to design for companies. And the type of companies, if we go to the next slide, that we're really looking at is the long tail of companies, which we call the mid-cap size companies. So a vision is to really democratize this type of approach and analytics to empower companies, independent of the size, to be able to diagnose, review, understand, and take action, and really bring transparency to pricing and profitability for companies that don't have the resources to be able to do that themselves. And so the mid-market companies that we're referring to, we are painting a broad range of somewhere between $10 million and $2 billion in revenue. But some of the key traits that we see in common for these organizations is that they have a lot of data available. In some cases, cleaner, in some other cases, messier type of data, which is not straight actionable. So they have a lot of data, but not necessarily a lot of insights. They also rely on extensive manual spreadsheets or internal databases. So the data is fragmented. There's a few people in the organization that know how to interpret this information, and it's really difficult to scale and to take advantage as a competitive advantage of this information when it's so fragmented and knowledge is so spread across different pockets in the organization. So the answer generally is a non-starter for these organizations because it either requires investing in very expensive tools or staffing up with people that are experts in the areas, which means building extensive data science teams or complete full-fledged pricing teams. And for smaller organizations, that's just not a reality that is feasible. And so what happens is pricing decision get taken because you still need to run the business, but there's a lot of gut feeling that is going on. And there's always that tendency and that instinct that the company is leaving money on the table. There is growth that they're missing out of, but they're just not sure how to go about it. And that's why we created Revify. If we look at the typical scenario, and I'm sure that people on the call will be familiar with this, we see this happening all the time during budgeting cycle. Companies will look at the current business, they look at the new growth initiatives, they look at new customers that they need to attract and retain over time. But eventually there's always a gap, right? And there's always something that is an intangible gap that people don't know how to close. And there is the plug that makes up the rest of the budget. And companies just don't know how to get that. And that's one of the opportunities that we see with Revify is being able to take the lid and uncover all these latent opportunities that organizations have that they're just not able to dissect the business and identify and do something about it. And some of the key drivers for this is happening is things that all of you and us see on a daily basis. Companies may be understaffed, and so you just don't have enough people to run the business and conduct analysis and formulate initiatives to do something about the root causes that you identified. In some cases, there's just not enough experience. Companies are seeing for the first time certain issues. Think about tariffs, right? How new that was when all of that got rolled out, and the mad scramble for a lot of companies to figure out what to do. Very often you have poor data governance. So the data is there, but it's just not in a usable form. The definitions are unclear, and that makes it an additional extra hurdle that people need to cross before they're able to actually do any analytics. The data may be decentralized, and so you may have a lot of pockets. Companies that grow through a lot of acquisitions obviously have that syndrome where you're trying to roll up data across the organization. It's just a battle in itself. And finally, lack of tools. We mentioned before that some of the more premium and high-end profitability and pricing and analytics tools are very expensive. We see a lot of these companies relying on Excel just because that's what they have available and that's what they're dealing with. But of course, what that means is that you end up using a lot of averages just because you cannot handle that much data in these tools, especially for a large distributor, let's say. So how does Revify help? Well, the way we organize this is really around three key areas. The first is around understanding core performance of the business. And so for that, we are looking at KPIs like price realization, we're understanding customer trending, we're looking at dissecting your sales over time. And so understanding how sales and gross margin are developing and visualizing a walk for individuals to understand why did my gross margin go from X to Y? What were the key drivers? Where did I lose margin? Where did I gain? And was this along the same plans that I had originally or not? Or is something being done onto me by the market or by my competitors? The second portion is around customer segmentation and the product segmentation. And so truly understanding your product affinity and understanding what type of cross-sell opportunities there are. So imagine being able to dissect your own data in the company and being able to say, hey, Armin and Enrico are buying certain products, but I know that based on other customers that are very similar to them, they should be buying all these other products from me as well, and they are not. How much opportunity is there latent that we should be taking advantage of? And the last portion is around simulation and scenario planning. And again, this is about elasticity. So it's very simple to go in and recommend the customer, hey, just raise your price. Yes, it's pure profit. But the reality is not as simple, right? What are the volume potential implications that could be unleashed by that action? And unless you actually have a pricing elasticity model behind the scenes, it's very difficult to predict what type of response you're going to have when you move the pricing lever. And of course, you don't want to experiment on a large scale and find out the hard way that you could have been a lot more surgical and gotten a lot more value if you did it the right way.
Yeah.
So,
the one thing that I'll,
go ahead.
sorry, one thing that I'll call out, Enrico, on this one, if you look at kind of the third option, for those of you that maybe have an analytics background, let's just be intellectually honest here. Like most firms will say they have AI. We use machine learning models essentially, right, to basically have pricing and promotional elasticities at a fairly granular level, and we use fairly complex machine learning models, kind of a combination of causal machine learning and hierarchical models that are pretty best in class, just based on some of the research that we've done. This is machine learning. We use the term AI because AI is in vogue, right? But I just wanted to call that out, so you don't think it's sort of a marketing ploy.
Yeah, that's right. And sometimes we also see AI being misused, right, in the opposite direction, where there is that cloud of AI, and in reality, you start digging in, and there's not a lot of science behind it, right? And
it's always the case. Yes,
I know. It's always a sexy syndrome to sell the concept.
Yeah.
But to back it up, I mean, the underlying modules that we created to guide organizations through this, we've shown here a few examples of what we're using. I mentioned a few of them. Some of them are really important because it's really helping the organization understand where the money is going and how people are operating. So just to bring one example, on the discount curve analysis, what we see as well is that you really have to boil down to what are individuals in the organization doing, which teams are empowered with what pricing decisions, and how do you model and visualize the output of those decisions or policies or lack of policies in some cases. And so there's a lot of noise, a lot of moving parts, and the strength for the Revify solution is to bring transparency where there is complexity. And by the way, there's a Q&A session as well. So if anyone has any questions along the way, please feel free to provide your question, and we'll do our best to answer during the call. The second module, Armin, do you have anything else to add on module 1?
No, I'm good.
Yep, perfect. On number 2, the question here is around the customer segmentation and the product strategy. So one of the key things that we see with organizations is struggle around customer churn and trying to predict it, first of all, and of course, trying to retain customers when needed. And so we've actually created ways of dissecting the customer base to understand who could be customers at risk and who are customers that are champions of your business or very loyal that you definitely don't want to sacrifice by doing something on pricing that maybe is not the right move. Similarly, you do the same analysis as well on the product side and understand which products are really core to you as a manufacturer or distributor or as a company, and vice versa, what is really important for your customer. And so very often, if companies don't have that type of transparency, they may end up not realizing that they're selling bread and butter products that the customers really care about, and that's why they're there shopping with you. And if they do something to jeopardize those products, then very often customers take the entire basket of purchase elsewhere, which is obviously a much bigger issue. And the last one, as we mentioned before, is the cross-sell, right? And so understanding which products go with other products and what type of cross-sell opportunities could be available, again, as Armin mentioned before, through extensive machine learning models that help predict which customers will shop what products.
Yeah. The one thing that I'm maybe add on this one is things like product affinity analysis and sort of market basket analysis and cross-merchandising strategy, et cetera, et cetera. It's very popular in retail, right? It's been kind of used for the last couple of decades in retail. It's still a very, I would say, heavily underutilized kind of analytics capability within most traditional industries, like especially distributors. Huge opportunity. Many distributors, even mid-market, have thousands, sometimes tens of thousands of customers, if we're talking kind of that $1 billion-$1.5 billion range. And they're just not using that, right? It's just very much of a, just let them order whatever they need. There's no kind of proactive, sales consultative effort just based on some of this analysis. And so this is analytically just a very kind of foundational capability that just needs to be deployed more broadly in these more traditional industries.
Yep. And then the last section that we have articulated is really around the simulation side. And so, as we mentioned before, also here, you want to try and simulate what outputs will be and have robust machine learning and parameters that you're using for your modeling so that you can have a pretty good idea of what is likely to happen once you take certain pricing actions. And again, this is something that companies that don't have this type of depth struggling to do because they resort to all or nothing type of actions, or just, for example, doing one price increase across the board, which of course, as we all know, is not the right solution in the vast majority of cases. And so this allows you to paint a much more surgical picture, to be able to visualize what could be the output of those actions, and then be able to select the right course of action for the organization. So now let's dive in the second part of our call, which is about the typical pain points we see.
Yeah. Yes. Let me just kind of address the first one. We have about 5 or 6 pain points, and these are things that we've again, this is based both on empirical research that we've done, just based on the revenue growth analytics maturity scorecard that we've done for the second year in a row, and it's also just based on our experiences, right? Both as practitioners, as functional leaders, and as consultants, right? So siloed data, just heavily manual analysis, right? This is still a big problem, and again, this is quite the dichotomy that I'm seeing as an advanced analytics practitioner and sort of an AI ML first pricing practitioner. It's a huge kind of disconnect, right, between the reality of what we live in versus how companies are still doing business, right? Which is just incredibly kind of manual steps. Data is all over the board, right? So a lot of the clients that we deal with, and even the current clients of Revify that we have, they have incredibly rich data, and that applies to both, let's say, a distributor that is, $50 to $75 million in revenue, all the way to a distributor that's 250 to 500. They have a lot of data, but it's all over the place, and it takes a long time to answer simple questions, right? Like, what is my biggest pricing quick win opportunities, right? What is the upside of adjusting my discount? And where should I be adjusting that discount? And how should I be modifying my discounting guidelines? And what is the EBITDA upside, or the revenue and the EBITDA upside of doing that, right? Typically, these questions just send teams on a kind of a fire drill-ish analysis of 1 week, 2 weeks before you have an answer, right? These things should be at your fingertips, right? And that's one of the reasons we sort of designed the platform the way we sort of designed it, and is to sort of enable these sort of connections of various kind of data extracts from these different systems in a seamless manner, right? So as we think about Revify at a very simple level, right? And you can kind of see some anonymized screenshots of the platform component of the pricing as a service function. But really what it does, it ingests the data using kind of standardized data pipelines from a variety of systems, right? ERP, CRM, et cetera, various exports. And it serves up the insights via these kind of purpose-built modules that Enrico talked about, right? So everything is in one place. Things are updated depending on client. Most clients want a weekly update. Sometimes if maybe there's some capacity constraints, they want like a monthly, but we typically a weekly update for a lot of the pricing upside views, a lot of the revenue profit decompositions, upsell cross-sell recommendations, et cetera, et cetera. And so these are automatically updated through our pipeline, served up in the client environment for clients to essentially self-serve and view. So they don't have to worry about managing this stuff internally through random spreadsheets. They don't have to worry about standing up a pricing and RGM analytics tool themselves. It's all done in an automated way using the data pipelines that we've established, right? So this is one key pain point that we've at least addressed through the.
And Armin, there's a very timely and perfect question about data that you may want to answer while you're tackling this pain point. The question is, are there any methods to evaluate if data segmentation is optimal for the Revify platform?
Yeah, no, that's a good question, Marcus. So one of the first steps, and we didn't go into the details of addressing this, but one of the first things that we do is we actually do a very detailed data health check. We call it a Revify data health check of our clients. So we basically ask for full transactional data and any other kind of supporting data, whether it's CRM, extract, et cetera, et cetera. We ingest it into our kind of data staging environment, and we run a series of data health checks. And we report back essentially to say, one, what is your overall data health, right? And that's a percentage, right? 100% is our score of 100 is the max. What is your overall data health? And typically, if it's 90 or above, the client is ready to be ingested and stood up on Revify. That takes about a week to get them stood up, right? So it's very fast. If it's less than 90, we kind of break down each of the subcomponents. How is your transactional data? How's your customer and product hierarchies? Are there any inconsistencies there? Do you need to introduce new hierarchies? Are there issues with your list price assignments? Are there issues with the way you're capturing returns, rebates, et cetera, et cetera. So there's a series of checks that we go through by sort of call it data category and subcategory as it relates to pricing and revenue management metrics and components. And we share that with the client, and we essentially go through kind of a data remediation effort if they're not ready for it to be adjusted into the platform. What we found, Marco, is, and honestly, we've every client that we work with so far, their data health score has not been at 90 or above; it's been lower. And so we've had to do minor changes, like either there's data missing, or let's create like a custom hierarchy in a CSV that you need to maintain, or we will maintain for you. But it's typically a very quick turnaround. It takes like a few days working with their IT teams or their data teams. But these are all quick fixes, but it really starts with the data health check. So I thought it was a good question, because honestly, we're finding that most mid-market companies will have kind of data issues per se.
And that's part of the value added, right, of having data scientists that can help dissect that before you actually put in dirty data into a tool that then has polluted visuals, right, to be able to dissect that. So, yep, great question, very timely.
Yeah, we've seen, and just to kind of expand on that, Mark, because that's really kind of my kind of core area. We've seen so many use cases and so many different data health issues across industries and sub-industries that our pipelines are for the most part automated in identifying what the issue is and recommending what the solution is. And there's typically algorithmic ways we solve even issues with the transactional data, just based on kind of patterns that we've seen in the past. So yeah, good question.
Great question. Yes, thank you. If you have any questions, keep it coming. That's great. And I'm just keeping an eye on time. As you know, Armin and I can talk about these topics all day long. So I'm going to move us along. On pain point number 2, what we see is undisciplined discounting. And this is further accentuated where you have organizations that have a lot of different teams that are touching customers and have pricing authority, and especially those that are lacking systems to be able to control those type of delegation of authority models. And so what you end up having is either a reliance on averages, for example, what's my average discount for certain customers, and lack of visibility as to how the sellers are actually getting to a price that is selling at, and how are customers responding to their price point. And so the impact that you see is that there's definitely margin leakage. You have some very wide variations, as you see in the chart that we've plotted on the left-hand side. And very often you break customer trust, right? Because in some cases you may be lowballing, and so you're winning business, but leaving money on the table. On the other side, you may be quoting prices that are way too high and are completely outside of market touch. So the way Revify answers that is to really bring views that organizations haven't had before, to be able to visualize how is your discount laid out and by the different players that you have in the company that affect discounts. And so what we typically see for organizations that don't have a lot of strong discipline around this area is that you start seeing a lot of areas where you have peaks of discounting, either because there is some type of limit. And so some organizations say, hey, you cannot discount more than 30%. Guess what? We see a peak at exactly 30% of discount. And that's an opportunity, because not always you do need to be at 30% to win that business. Or you have areas where you have very low discounting, but with price elasticity, we actually seen that there's actually more volume that you can attain if price is more market relevant. So there's a lot of learning that we've been able to extract from different views on discount analytics. And this is, again, one of the powers of having that X-ray view of your business from a transactional standpoint.
Yeah, and obviously just the kind of these visuals and charts that we're presenting, these are kind of just illustrated. This is not obviously how the modules look like, but conceptually, right, if you think about the Revify platform, there's sort of a deep dive element and sort of concept built into all of these, right? And with sort of dynamic display, so we can look at these things by customer, by product, by segment, by customer product, variety of different levels, right? With the ability to kind of multi-select these sort of areas and view the details right down to the transactional level to identify what the issues are. So conceptually, that's how you should think about all these sort of, when we talk about the Revify solution, conceptually, that's how you should think about it. Obviously, we can't show the module in kind of this, in this kind of public format. Yeah. The other piece that's pretty prevalent, right, is just sort of what we call kind of a gross pricing misalignment, right? And so in most, most organizations, again, none of this is intentional, right? But there's just so much focus on, doing cost plus. And in a lot of B2B settings, right, especially like in distribution and many parts of kind of manufacturing, right, pricing is just not as transparent, right? And it's certainly not as transparent as it is in let's say, retail or CPG via syndicated data providers, right? And so it's really hard to get that kind of accurate competitive anchoring beyond kind of, research publications and higher level kind of aggregated reporting, right? So what ends up happening is there's a lot of misalignment on low volume products with kind of low to medium price sensitivities, with incredibly low margins, right? Or conversely, large volume products with high price sensitivities being priced way too high and having high margins, right? And so one of the easiest ways to sort of fix it is, and again, evaluate things across the dimensions of size and year-over-year growth rates and price sensitivity, and looking at their margin profiles. And based on these dimensions, you can easily triangulate like what are the easiest pricing quick wins that organizations can do over and beyond kind of their annual price increases that are mostly driven by inflation. And so you would be surprised, even simple things like having this kind of a performance/price sensitivity segmentation approach can drive typically 1 to 2 percentage points that'll flow directly down to operating profit, right? And again, we've enabled this in a sort of very automated way. There's kind of three things that kind of underpin this approach in Revify, but we have some pretty kind of I would say selfishly best-in-class price elasticity models, which are incredibly hard to do in B2B for obvious reasons, right? Largely around kind of data sparsity and high long tail of kind of SKUs and customers. But we've done this for a number of years, and I think through our sister company Revology, we've built some fairly sophisticated elasticity models that work well. We have a kind of a pricing quick wins opportunity map that is present in Revify, right? So it obviously plots. It allows you to run these simulations with different levels of segments and understand the impact of volume, profit, et cetera, et cetera. It also makes recommendations of where you should move. There's a scenario simulation for like pricing scenarios, right? Like what happens if I move my price, or what happens if I adjust my discount, or what happens if I adjust my margin, right? If it's cost plus. And it sort of lets you run several scenarios to observe the impact on the business, right? And so we've sort of enabled this throughout the tool, again, with the ability to run these scenarios across multiple segments or just specific segments of the business or specific performance segments of your customers or your SKUs.
Yeah, and on that front, we also see very often that companies that don't have the sophistication level needed to look at things from a product and customer combination. And so they'll try and optimize price for a product across the board. But in reality, through a diagnostic, we can see that there's opportunity to vary that pricing, right, for different customer groups or different geographies. So having an external point of view with us, having seen this many, many times before, it's helpful to ask the right questions to identify opportunities that the customer may not even have seen in the past. Similarly, what we see is around SKU proliferation. And so the point that we often see here is that these especially distributors have very extensive SKU portfolios, and obviously there is cost involved with maintaining that assortment, stocking it, and selling it. And spreadsheets here again, another great way of keeping track of what's happening and which of these SKUs are actually profitable versus not. So there's a question of understanding profitability. There's also a question of understanding cadence and which customers are buying what and why. And again, what type of cross affinity you may have and cross-sell opportunities. So the way Revify helps in that regard is to really understand, first of all, from a price cost trending, which is very timely now given the tariffs, a lot of companies asking questions on that front, which SKUs are actually profitable for me and which ones are not, and how is that picture changing over time? So that's one of the views that customers appreciate about Revify, of being able to understand where they have growing or shrinking profitability. The second part is around, again, the elasticity, as we mentioned before, and being able to run simulations on certain products and understand what could be implications if they make changes to either the product assortment and or pricing within the assortment. And then the last one, as we mentioned before, is truly understanding which products are important for customers And therefore, if you eliminate something that you think may be a long tail product that for you is a nuisance, that may be actually the main reason why that customer is buying from you. And they may be buying other products at the same time from you as well. And so understanding all these moving parts is important so that companies can make the best possible decision.
Yeah, before we talk about the kind of the fifth point, Christine asked a good question, and I see that it was addressed in the Q&A by Enrico. I just want to kind of maybe share with the rest of the group here. So Christine was asking if on the functional process of data kind of ingestion and mapping, is there kind of direct APIs to common ERPs, right? So whether it's NetSuite or whatever else firms are using, and CRMs or kind of an SFTP batching, and aptly so, right? She said that's one of the things that typically slows down analytics projects, and that's exactly been our experience, right? So for honestly, most of our clients so far, the easiest kind of method that caused the least friction in their organizations is just a direct upload into our Revify customer portal, direct upload of CSVs or text files, right? That was the easiest thing to do. There's no additional development, there's no additional setup. And again, keep in mind, we're talking about organizations here that still very much run like small entities, despite that they're often $100 million, $250 million. But that was kind of the easiest method. Later on in the development roadmap, we talked about having kind of generative AI, most likely in 2026, 27 against our pricing and an RGM reg environment that we have internally. That could be one. The other one could be kind of a more sophisticated kind of direct connectors to popular ERPs. But again, we just didn't feel that it was necessary, given that direct uploads on our portal was super fast, frictionless, and anyways, customers are just kind of uploading data extracts that they're already used to kind of analyzing. And so for now, it seemed like a decent way to drive progress for these companies. But let me talk about the pain point around customer churn. So again, typically what we see is there's, static reports for a lot of sort of clients that we deal with around, okay, what has been our net customer count, how many, new customers, or how many customers churned, et cetera, et cetera. And so these kind of average metrics are really kind of hiding a lot of the useful detail underneath it, right? Like, is your kind of highest profit generating customers have their order patterns, or they're actually slowing down, right? Or are they at risk of churning out, or are they at risk of procuring a certain subset of their portfolio from others, right? Or the ability to predict when customers will churn, or the ability to predict which customer will churn in the next, let's say, 30, 60, 90 days. And what are the reasons they're going to be churning, right? And you can answer this through transactional data and perhaps CRM data, or kind of augmenting your transactional or customer hierarchy data with some like firmographic stuff that's easy to kind of do. And so you can answer these questions very easily. And again, Excel is very limited to doing this. And most companies, again, most traditional kind of industrial distribution and manufacturing companies, but especially distributors, where this is perhaps the most important and relevant, they just don't have the capabilities, by and large, to do this, except some of the larger ones that we've seen, right? And so we've done sort of 2 or 3 things that we've been able to verify, right? One is your kind of RFM customer segmentation-based approach. And we have about 4 or 5 or 3 or 4 views on RFM segments, down to the detailed customer level, where you can look at which customer belongs to the champion category, which customer is about to churn, which customer has been a great one from a past value generation standpoint, but they've become dormant, or they are about to become, et cetera, et cetera. So these sort of insights are being served up. Again, foundational analytics, but it's available to all of our clients. They can go down and sort of create specific account plans and prioritize the sales and marketing outreach with their sales teams. The second piece that we offer, this is part of the enterprise capability versus our kind of core capability of Revify, is predictive churn modeling, right? So we do this using machine learning, or let's call it traditional AI, but we typically do this again off of transactional behavioral data and some firmographic data and some other things that we collect from the client, and we can predict customer churn to a fairly high degree of accuracy. Obviously, the shorter the time frame is, so if we're trying to predict churn, let's say 30 days out, models tend to be more accurate than trying to predict churn, let's say 90 days out, right? But actually doing this and standing this capability up for companies is a really high ROI effort, just because you can drive better retention. You can also use a lot of the kind of modeling elements to drive some upsell upsell efforts, right?
And from a change, oh, go ahead, Armin, sorry.
No, go ahead, I'm done.
Yeah, just to add, from a change management perspective as well, this is where we've managed to earn a lot of kudos from the sales organization. As you can imagine, sales organizations already say, hey, we already have plenty of work on our hands. We don't need, more work or more things to do around pricing. But this is one area where there's a win-win and where we're able to point out changes in patterns that even the sellers were not able to recognize and be able to go back to customers and say, wow, I did not realize that customer stopped buying that product, or that they've, the frequency has changed or the volumes have changed and so on, until it's way too late. And so this often earns us kudos and credibility and buy-in to be able to attack, bigger problems with customer organizations. Great. The last pain point is really about, what options do mid-cap companies have in order to address some of these pain points. And one of the things that we've seen is that the upfront investment just becomes too massive, right? It becomes debilitating, and it's a non-starter for a lot of organizations. Both Armin and I have been fortunate to have worked with large organizations, either driving and leading large teams and or having access to very sophisticated and very expensive pricing analytics softwares. So we know firsthand that that's not an option for a lot of smaller companies out there to be able to just, first of all, make that massive investment upfront. And then secondly, for the length of time that it actually takes to stand up some of these solutions. And so the reason why we created Revify in this way, and this also dovetails with the question that Christina asked and that Armin was addressing before, is to try and make it as simple as possible for customers to onboard and start getting value, and as well limit the amount of work that the IT team needs to do in order to either set up new systems or have to connect systems. And so what we found is this dramatically accelerates the speed at which we can get up and running. And we've been able to do it with real life customers in a matter of 2 weeks or less, with customers that have, ready to go data, somewhat clean, that with minimal intervention can be incorporated and ingested in Revify, and we're up and running. So definitely much faster than any other type of large upfront investment. And the way also that we've priced the solution is as a subscription model rather than asking for an upfront fee, which obviously makes it a lot more palatable for smaller companies as well. So overall, what we think, we have something very special. Hopefully people that have joined us today agree as well. The advantage that we bring to the table is advanced diagnostics together with expert guidance. With Armin and I and data scientists that have seen these type of scenarios across different companies, and being able to bring, machine learning and artificial intelligence tools that companies don't have access readily today to fruition with their own data, and then be able to actually guide customers to say, hey, we've seen this pattern before. Here's 2 or 3 ways that you can go about it. From the most impactful to the least impactful, and from the most complex to the least complex. And having that combination of the diagnostic, the interpretation, and the guidance is really helping organizations that we've worked with so far get traction much faster and start seeing results out of the gate, compared to having to make big investments and longer lead times. All right, and the last is a call to action. So please reach out to us. Go on myrevify.com if you like to read more about the solution and how we approach it. You can email us at support@myrevify.com. If you are a company that wants to explore more, schedule a free consultation. We'll sign a mutual NDA to protect both the respective intellectual properties and have a conversation to determine, how much of a fit and what we can do to help your organization. If you are working with other organizations, we do have a referral program. And so please reach out to us to learn more about that. That could be a win-win. And we really thank you for taking the time today to join us. Armin, anything that we haven't covered so far?
No, I just wanted to thank for your time, guys. These webinars are always very sort of engaging, and appreciate all the questions. And please get in touch with us. I think we have kind of a revolutionary structure and tool when it comes to pricing and revenue management that really kind of reduces the friction at a very low cost for mid-market companies. And so we definitely invite you to engage with us and learn more. So thank you very much, and enjoy the rest of your